VOO and FXAIX are two popular investment funds that offer exposure to large-cap U.S. stocks, and they're often chosen by investors who want to track the overall performance of the stock market. While they share many similarities, there are key differences in how they're structured, traded, and accessed, which can impact your investing strategy depending on your goals and preferences. VOO is the Vanguard S&P 500 ETF. It's an exchange-traded fund that tracks the S&P 500 index, which includes 500 of the largest U.S. companies. This includes well-known names like Apple, Microsoft, Amazon, and Google. VOO is designed for investors who want an easy and low-cost way to invest in the top-performing companies in the United States. It trades like a stock on exchanges, meaning you can buy and sell it throughout the day during market hours. Its expense ratio is just 0.03%, making it one of the cheapest ETFs available. Vanguard is known for its investor-friendly approach and long-term focus, which makes VOO a great choice for building wealth steadily over time. FXAIX, on the other hand, is the Fidelity 500 Index Fund. It's a mutual fund that also tracks the S&P 500, so its holdings are almost identical to VOO. The top stocks and sector exposures are the same, meaning performance is nearly identical over time. FXAIX also has a very low expense ratio of 0.015%, which is even cheaper than VOO. This makes FXAIX one of the lowest-cost mutual funds you can find. However, since it's a mutual fund, FXAIX doesn't trade like a stock. Instead, it's bought or sold at the end of the trading day at its net asset value. This means you can't trade it during market hours like you can with VOO. Now let's look at the differences more closely. First, access and flexibility. VOO is an ETF, so it offers more trading flexibility. You can set stop losses, buy in real time, and use various trading strategies. It's great for both short-term and long-term investors who like more control. FXAIX, being a mutual fund, is best for long-term investors who don't need to trade during the day and are fine with simple end-of-day pricing. It's ideal for retirement accounts or dollar-cost averaging. Next is cost. FXAIX has the slight edge here with a 0.015% expense ratio, compared to VOO's 0.03%. While the difference is small, it can add up over time for large portfolios. Still, both are considered ultra-low-cost options that are far cheaper than actively managed funds. Another factor is minimum investment. FXAIX typically doesn't have a minimum if you're using a Fidelity account, making it very accessible. VOO, since it's an ETF, can be bought in fractional shares with many brokers, so minimums aren't really an issue anymore for either option. In terms of tax efficiency, VOO might have a slight advantage. ETFs tend to be more tax efficient than mutual funds because of the way they're structured. They can avoid passing capital gains on to investors more easily, which might reduce your tax bill in taxable accounts. But for retirement accounts like IRAs or 401(k)s, this difference doesn't really matter. So which one is the better choice? If you want flexibility, real-time trading, and are investing through a brokerage that supports ETFs, VOO is an excellent pick. But if you're already using Fidelity or prefer a mutual fund with an even lower expense ratio, FXAIX is hard to beat. Both track the same index, offer strong performance, and keep costs very low. Your best option depends on how you invest and what features matter most to you.